Welcome to the monthly Truck Stop webinar presented by the Motor Carriers Insurance Education Foundation and the Transportation Risk Specialist. These webinars are presented every second Thursday of each month at 2 p.m. Eastern Standard Time. Today we'll talk about CSA. Our program for December will address cargo and cargo thefts and how to limit cargo. These webinars are not for CE purposes. The Motor Carriers Education Foundation does provide webinars for CE purposes, and those are presented on the first Tuesday and the third Tuesday of each month. If you have any questions during the seminar, please type them into the chat window that you'll see on the right-hand side. If we have time, we'll answer them through the presentation. Most often, though, we fill the presentation time up, but we do email answers to you, and if it's generic enough to everybody, we share our answers with everybody that would be in attendance. Also, sometimes we have audio problems and other problems here, and again, you can type those in the chat window or call our office at 800-741-4084 to correct any problems. This webinar will be recorded, and for information purposes, it will be posted on the TRS website so that you can access it later for training for your staff or other people that you might want to share this with from your insurers, or if you're motor carriers, for some of your safety people. So these are welcome webinars. These are designed for informational purposes. Today we're going to look at CSA. We're going to look at this new website. If you're not aware of these changes that were made about a month ago, you need to be. In fact, I did a program and I said all of a sudden, wow, I wasn't aware of this new webinar. Some of us in the insurance industry are dependent on CAB, Central Analysis Bureau, for our source of information. And CAB does not look at the CSA webpage. They aggregate the information on that webpage and present it in a friendlier user manner for most of the insurance underwriters, but it's not different from this website. This website has a lot of new things involved in it that we will explore today for your benefit. But let's look at, first off, what kind of business we might find that will have information in this website. The federal definition of motor carriers: anyone using a vehicle for commercial purposes in interstate commerce that has a GVW of 10,001 or larger. This is any unit, a dually, with 6 wheels, and it does include private. So not only the 18-wheelers, not only the people with MC numbers, not only the for-hire truckers that we all look at, but also private carriers would be information and would be affected by the operational standards set by the federal government, and the information concerning them would be in CSA. That's the size of the vehicle. So if you have any insureds who have vehicles that size that cross state lines, under the federal regulation, they must obtain a DOT number, they must pay a fee into the Uniform Carrier Registration System, and they, as a part of the registration of the of their business, when they obtain the DOT number, their information shared on the 150 form will be available to everybody, and any operational standards they would have to meet would also, and any violations of those standards for roadside activities would be represented in CSA. So clearly it's not just for the full for-hire trucker 18-wheeler we're used to. What you find out on the registration, as you know, is a name, address, number of power units, and miles. This information must be updated every 2 years. The two things that are essential to update every 2 years is the miles. The number of units do not change, but miles do change. This was effective a year ago, and motor carriers who do not update their information on the 150 based on their biannual requirement and determine when you have to update would be the last 2 numbers of the DOT number. The second one from the end would be the year, even or odd. The last number of the DOT number would be the month, with 1 being January and 0 being October, and nobody updates in November and December. If you do not update the information within the required 2 years, you're going to get a letter from them, from the federal government. As a part of that letter, you will be will tell you that you have to update. If you don't update, you'll lose your registration. And if you operate after losing the registration, you can be fined $1,000 a day, up to $1,000 a day, with a total of $10,000. So it's very important that you do this update. It also reflects the commodities haul and your inspection results. Today we have 4 results shown: unrated, satisfactory, conditional, and unsatisfactory. Today, most of the motor carriers in the website are unrated, because to be rated, you must have a full compliance review at your office, and a lot of compliance reviews are not being done under the new CSA system, where there are more interventions for focus than a full compliance review. In the data we have, just for informational purposes, over 75% of the motor carriers with MC numbers are unrated. One of the things that, as an insurance provider, that we emphasize in our programs is retail agents, when you send an application in to the Get Insurance Written through your marketplaces, you must make sure the information that is found on the federal web page matches the information on your application. Or if it doesn't, you're going to get kicked back. Obviously, sometimes you need to help the insurer to update the information more than every 2 years. You can update it anytime you want to. It just has to be updated every 2 years. And if there's any anomalies in there, agents, you need to explain to your market what those are. You will not get a risk written in this marketplace unless the information that you will have on the application matches the information that's available in the public website. So what CSA is, the own road inspection results. This is reflected in the CSA. This has only been with us now almost 4 years. The insurance providers use it for underwriting and pricing considerations. The shippers are using it to select who to do business with. And drivers are using it to who to work for, because drivers who have a good, clean record can't afford to work for a motor carrier who has a problem with CSA and has alerts, because they're going to be stopped more often. We have had many programs to show how this system and the rating system is flawed. We don't have time to go into it today, but it is a system that is not a true predictor of crashes, yet it does affect claim considerations that we have. So as an insurance provider, we have to balance this information, the information shown and the alerts shown, or the scores shown in the CSA, and how it affects the underwriting and claims. Those are subjects for a different day. But to understand the relevance of that, you need to understand what is shown on the website and what it means. And again, we're going to explore that today. What the information is put in or compared with is safety event groups. This is not a reflection of the crash probability, but how one motor carrier measures up to another in their group. It's really peer pressure or peer comparison. The safety event groups are made up of 2 elements. For unsafe driving and crashes, it's based on the number of units and miles as reflected on the 150 report. All other safety event groups are for numbers of relative inspections. So an insurer could have a different peer group, a different safety event group for unsafe driving than they can have for driver fitness. If the comparison is unfavorable, then they will be sent an alert and get a letter, and the intervention process will start. The intervention process is the government is going to intervene with the insurer to encourage them to improve their operation before the crash happens. That's the purpose of this program. If the rating gets over the threshold, which in the case of general commodities is 65% for unsafe driving, hours of service, and crashes, then they will be put on an alert and get a letter. For all other, again, driver fitness, controlled substance, alcohol, and vehicle maintenance, it would be a 80%, and also with the hazmat. So this is how you compare within your safety event group. As a part of this, with that brief explanation, I've asked Tom Fulton, a good friend of ours, someone who presented at our annual conference of Thorn Valley Enterprises, Inc., to share with us about the new CSA webpage. He's an expert in this area, and he will talk you through it and show you what's there now. Tom, are you there? And please take it over.
Okay, Tommy, thank you very much. I'd like to thank the Motor Carrier Insurance Education Foundation for inviting Thorn Valley to participate. And we'll be talking about CSA Phase 2, which, as Tommy mentioned, in August, the new look of the CSA site, SMS website, was introduced by the Federal Motor Carrier Safety Administration. Before we get into that, I would like to just say a couple of things about who we are, Thorn Valley Enterprises, and what we do. We're considered a loss control service, and in fact, not sure who all's on the line, but perhaps we might have even seen one of your accounts at some point in time. We see anywhere of upwards of 2,000 different accounts each year, and one of the key areas, obviously, that we look at now is how they're doing on their CSA scores. So with that, we'll move ahead. Now, we're going to present in the following format. We'll take a look at what the new SMS format looks like. And in addition to that, why did they make these changes? Part of the reasoning behind it was well, primarily requests from many of the major motor carriers that utilize that information to manage their businesses, and they asked the government to make the site more user-friendly, if you will, or present the information in a more logical format, which it has. In addition, the government has actually done some studies on, now that we've got 4 years almost behind us, on how these basics that Tommy mentioned relate to crash ratios. And from that, they developed new rankings for the basics, or intervention prioritization, if you will, depending on which basic is starting to get some temperature as far as whether or not that's going to develop intervention in the form of a letter or actually an on-site visit. Finally, we want to take a look at now where are we looking, and where should we be looking and focusing on, because as Tommy mentioned, the not only the insurance industry, but shippers, brokers, and even drivers are now using this public information to determine who they choose to do business with from a trucking standpoint. And finally, despite the all the changes that have been made with this new CSA Phase 2 format, we find the vast majority of the companies that we continue to see out there on a daily basis are still asking the same question, and ultimately they want to know, how do we reduce our CSA scores? So we'll address that towards the end of the presentation. Okay, this is what the new home page looks like, and the address is up here at the top, https://ai.fmcsa.dot.gov/SMS, which stands for the Safety Management System. Again, this is public information, so you can search for any company you like simply by entering the company name, or if you have the DOT number, in the search box and searching there. Don't use the search box up at the top. If you're looking for a carrier, use this search box here. Again, this is public data. No PIN number is required to get at this information.
Tom, let me add something. For you who are used to going through this for the SAFER web page, what you'll find is the same information in the SAFER web page, where you look at the middle column and you have a snapshot which will give you information concerning each motor carrier. Below that you have analysis and information. That's where you can then click on that and get into the SMS information directly there. So for you who don't access it to the FMCSA website, which is the one that Tom gives you here, you can also get the same information by going into the SAFER website that a lot of y'all are used to doing.
Absolutely. It's got an SMS link on the top of the SAFER page, which will take you directly to that carrier's profile. Here's a sample carrier here of what you would see. Now, over to the left where it says motor carrier information, we have this blanked out so that it's hiding the identity of this particular motor carrier that we're looking at, as well as their MC number over on the right-hand side of the screen. From the SAFER or the MCS 150 or the carrier census data information, one of the reasons that they came up with these changes was to try and get everything into one website, if you will. For example, now on the home page of the SMS site, you can see total number of vehicles, number of drivers, and number of inspections, just as you would on the SAFER website. And right there in the center of the home page shows the out-of-service percentages for vehicle, driver, and hazmat as those compared to the national out-of-service average percentages.
Tom, I'm sorry. Tom, go back a page. Let me say one other thing here.
Yes, sir.
One interesting part here is, remember I said that some of the basic scores, other than unsafe driving, hours of service, and crashes, are based on relevant inspections. This particular unit risk has 40 power units, and they've had 67 relative inspections. Tom, I have seen people with 5 power units with 67 relevant inspections. And the point that I make in classes is that they're in, other than the 3 classifications based on number of units, those are in the same safety event group as this one with 40, which doesn't seem quite fair from an operations standpoint. So that's one of the areas of that has been criticized, is that there's no relationship to the operation from a standard of the intervention for the safety event groups as a number of relevant inspections as a function of vehicles. I don't know if you have a thought about that, Tom, but that's something that I bring up.
Well, if there is a disparity in that area too, we have to wonder if they're actually reporting their number of vehicles accurately. And hence there is the biannual filing requirement. And as you will find out, there may be instances where the insured may have a incentive to over-report on their vehicles, if you will. And on this particular carrier here, we're going to do a little bit of a case study later on. And I think that'll come to bear with when we get to that point. Now, as one thing that is highlighted on page 1 is if there's one of the golden triangles with the exclamation point in it under any of the 6 different basic areas, that definitely causes the eyes to be drawn to that area of the page. And if this is a blown up picture of the hours of service compliance on this particular carrier with the 40 units. And the actual measure, and we'll get into the methodology later, is 1.87, and we'll tell you what that means. But in the peer group that we discussed earlier, for everybody in that peer group, this measure of 1.87 is higher than 76% of everybody else in the peer group. And that's yes.
Tom, what scares me is this wording, and this is new, guys. If you haven't seen this, and you who go into CAB and doesn't look at this with it, what this says is 76% of the motor carriers in the same safety event group have better on-road performance than this motor carrier. That's a profound statement. And again, it's the peer group. What we don't show you here, because of just the page size, is right below that statement. There's actually a situation where you can click on to the other motor carriers in that safety event group. So the government's not only saying that where this particular motor carrier ranks in their safety event group, but it can show other motor carriers who might be better or worse in their same safety event group. So this has caused some problems with particularly smaller motor carriers who kind of vacillate more, and also we have no idea how this is going to float in any kind of a legal system. But Tom, that's new wording, and I don't know how you feel about that, but I find that kind of troubling from a insurance standpoint and from a potential liability standpoint.
Absolutely, I agree. And the 76% number you can see is 11% over the threshold of 65% for this particular basic. So to improve things, again, back to the old question, what do I do? He wants to get under 65 is what he wants to do. And we'll talk about what he can do to manage that facet of the CSA profile. But if that's okay, I'll go ahead and move to the next slide, Tommy.
You're on. Go ahead.
Okay, very good. Now, further down the page, this is at the bottom of the same page, home page that we're looking at, we've highlighted some key areas of information. Now, one thing I would like to point out on this screenshot here, you can see in red where it says carrier vehicle mile traveled or carrier VMT outdated. I want you to know that listeners need to know that this is not for that same carrier we're looking at earlier. We chose this screenshot just to show how that particular, if they miss their biannual filing requirement, where that will be highlighted on page 1. And in addition, if they've had any penalties or closed enforcements due to DOT audits, that will be highlighted in the blue. You'll see on the top right of that page where this carrier was fined $11,520 for a violation of one of the hours of service regulations. I believe that's falsification, if I'm not mistaken. Further, for agents and underwriters, good information can be found under where the arrow points, the left arrow is pointing to the carrier registration details. Should we go ahead and open that up, Tommy?
No, Tom, 1 second. Guys, Tom's mentioned something important you here. We could not do this before, but anytime you're insured on the right-hand side here has had a case filed against them, they show what that's for and showed how much they've paid. That shows, again, a relevance of how they are and what kind of penalties they have. This particular unit has the number of power units here, and they have the crash. The second thing is you see in the red where the carrier's vehicle miles are outdated. That's what's going to be changed every 2 years. This is what that flag meant. The old system actually had a flag there. Now, if the government follows what the rules are, they'll get a letter and saying, if you don't update, your DOT registration will be taken away from you, and then if they keep operating beyond that date, that's when they can get fined. So there's some information here that you as a retail agent or you as an insurance provider can help the insured with, both looking at their fine history and tell them how much it's cost them for not addressing the problems that they have with the CSA, but also it tells you how to keep them current by helping them do the 150 report. So I just want to point that out. Tom, you did a good job showing that. Thank you. And also this next one on the registrations has some information we need too. Go ahead.
Yeah, we're going to also towards the end, because this a lot of this is presented from a loss control standpoint, talk about briefly leading and lagging indicators. And what we would see here in the blue box for the penalty, that would be a big lagging indicator, which is the result of ongoing behavioral issues that were leading up to that. So if we go into the carrier registration detail, that was the blue arrow was pointing to on the screen before. Again, we have the motor carrier information whited out on this particular page. But again, this shows the detail on the fleet count and what they're hauling. But more importantly, if we go down, scroll down on this particular slide, it'll give us helpful information, which we really didn't have on the SAFER, which was telling us the trailer count, both owned and term leased as well.
It shows two things here that's interesting from an underwriting standpoint, Tom, and you're absolutely right. This particular risk has more trailers than power units. And I'm actually writing a white paper today on how to handle these trailers that are not attached to a power unit, these spare trailers. Do they let other motor carriers use them or not, which is a real concern. There's 3 or 4 cases that I've been involved in recently about that. So you, as an underwriter, got to decide how to handle those spare trailers. Are they letting them, other motor carriers using them, or are they only used by themselves? And if they let other motor carriers use those trailers, what kind of impact does that have on your insurance? The second thing it shows on the right-hand column there is term lease. It shows how many are owned units and how many are leased. If they have term lease, then you know they either are leasing vehicles from PACCAR or other leasing services, and or they're using owner-operators. which create a problem. But in either case, you know, the owners of those vehicles need to be addressed in coverages, and we need to add endorsements to properly address these non-owned autos that the insured is using under their authority, which is represented here. Now, I'll also say one other thing. This doesn't mean this is all accurate. This was only accurate at the time that they updated, and they haven't updated currently, so that's something you want to check. But the two elements that I find here with this information is what to do with the spare trailers, who they're letting use the spare trailers, and second is, are they using vehicles they don't own as a part of their business, and how do we underwrite that, price for that, and make sure we have proper coverage for those units. So one of the things I always want to check is this information here so I can talk to the insured about those questions.
When we get into the methodology in the next couple of slides here to understand the calculations involved in determining the CSA score, we'll see the importance also of an accurate power unit count in reflecting a true and accurate CSA score. And I can tell you, on the case study we'll do briefly on this particular carrier here, he's reporting 40 power units, but when we did our annual and 6-month follow-up loss control, we're only seeing about 25. And we'll see how that reflects, it possibly reflects in how the CSA data is analyzed. Okay, back to the page where we access the carrier registration detail, basically the bottom of page 1 from this carrier profile in SMS. The actual methodology of how the scores are determined and the point values associated with each violation can be downloaded by this at this link to the SMS methodology. We'll take a look at what that looks like. Here's Table 1 from Section 6 or Appendix A, and this will show the violation severity by basic. And here we're looking at Table 1 for the unsafe driving basic, and it's in order by the section number or the federal regulation, and it gives a description of the regulation and then what group it falls into, and then the weighting. And 10 is as high as you can go. You can see that I believe texting is on here for 10, and the far column indicates whether or not those particular violations also appear on the driver safety management system, or some people are familiar with that being called the PSP. But it's important to know from a management standpoint basically what are the low-hanging fruit and which are the most severe violations by weight. And not only do they carry weight for the point value associated with the violation, that's also multiplied by a time weighting factor depending on how recent it is. And we'll get into that in just a bit. Tommy, did you have any comments on this slide?
Yeah, I want to this new website makes it a little more cumbersome to get this information than the old website, which we can click right onto it. When Tom mentioned here where you have the SMS methodology, you click on that, but that's a 160-page document. What you need to go to there is Appendix A. There's an index there. If you go by the first page of the index, you can click on Appendix A. And if you click on Appendix A, it'll take you to the severity, the violation severity basic numbers. And there's some 600 and some violations. And my strong suggestion is, if you don't have sources other places, that one of the things I would want to do when I talk to the insured is know what the various severity basics are, and I would click on that. So you who are doing this on a regular basis, if you do not have other sources of this information, the way you do it, again, is the SMS methodology, which is you click on there, you look at the index, and you look at Appendix A in the index. If you click on Appendix A in the index, then it'll bring you to this the severity. And I think, Tom, you and I are saying the same thing. It's very important for both the retail agent, the insurance carrier, and the insured, the motor carrier, to understand these various severity ratings.
Absolutely. Okay, you want me to go ahead and move on now?
Yes, sir.
Okay. Now, I mentioned that one of the changes with the CSA Phase 2 significant phase, and part of it from a political standpoint is FMCSA and the government is definitely going to use this to back up their case that their data is valid, because there's been a lot of attacks on the validity of the data and arguments for and against. What I want to point out is this, if you would like to know how does SMS relate to crashes, there's a button that says that on there just to the right. You'll see the blue arrow here. If you click on that link, it'll bring up these slides. And the slide on the left, you can enlarge these slides by clicking on them when they're on your screen, by the way. The slide on the left, well, both of these slides show the average crash rate per 100 power units. I believe that's 3.43, if I'm reading that number correct, in the middle. And then the bars on the left are the left screen are the number of basics that the motor carrier had in an alert status. So, for example, for motor carriers that had no basics in alert status, 0 basics in alert status, their crash rate was 2.69 compared to the national average of 3.43. As opposed to motor carriers, this is a sample of a study of over 100,000 motor carriers, those that had 5 or more basics in alert status had a crash rate of 7.17. And the numbers that have been provided by the government tell us that the more basics that are in an alert status, the higher the crash rate is for that sample of motor carriers. This is not intended to be a predictor of crash propensity, but what it is intended to do is show a relationship, not just between the number of basics, but also which specific basics. For the graph on the right, you'll see the driver fitness basic on the left. Those with the driver fitness basic in an alert status had a crash rate, I believe that's reading 3.11 compared to the national average of 3.43. As opposed to the far right, motor carriers that had the unsafe driving basic in an alert status, where their crash rate was 6.62, related in relation to the 3.43 national average. So what they're trying to show us is that depending on which basic it is, it's a higher crash rate. Again, this isn't supposed to be a crash predictor. It's just supposed to show the relationship. One thing that's a little bit confusing about this is when we go to the next slide, the basics are going to be arranged in the reverse order that they are on the slide on the right. You'll see the unsafe driving on the left, and then the next will be the crash. So they've arranged the basics in the order that they appear on the slide on the right here. Okay,
Tom,
yep.
Just real quickly, you are absolutely right. This the government's putting up here to promote their program. As you know, there's been studies that have been done by the American Transportation Research Institution that Dan Murray shared with us at the annual seminar, our annual conference we did a month ago, and other data by the GEO that shows a little difference in this. However, they all show that the more alerts you have, the greater chance you have of a crash. But this is their information, and I only would want to caution you is that this is the government information. There is other reports out here that have similar findings but different findings that might have. So that would want to point that out.
Yeah,
Tom.
Definitely. And again, we're only 4 years into this, really. So that's really insufficient data to draw overall far-reaching conclusions like that. But what they're doing right now is showing the government data that from their studies and what they have at this point. And again, so they can continue their case for SMS. Now on the home screen, again, you'll see that the unsafe driving is on the far left, and what they've done is they've established unsafe driving as the top basic intervention priority. Now, despite the fact that we see the hours of service compliance, which is third predictor or third highest crash frequency from the chart we saw before, in an alert status, we need to look at all basics, not just the ones in the alert status, and we'll show you a good reason for so doing.
This is a major difference for you who looked at the other safer, because in this case, if you remember, the old program had the individual scores for each one of these basics based on a speedometer type rating. So when you looked at the unsafe driving, you could see what their score was, or you can look at the hours of service with alert and see what their score was as compared to the safety event group. That information is not available on the screen. You have to go into each individual basic to get the exact score. So there's a little difference in how this is developed, and also, as you point out, they're rearranged based on the far left-hand side, the better predictor of the crashes, or more predictor of a crash, versus the right-hand side, the less predictor of the crashes. But that is a major difference from the old system of this one, that we don't see the exact scores in the safety event group without clicking on to the individual basic.
And purposely done by the FMCSA too, because of the flack that they received on CSA Phase 1 with those scores, if you will. They really weren't scores. Those were percentile rankings.
Right.
And that was where all the flack was coming from, based on a curve rating. There were a lot of business decisions being made that were affecting carriers, as we discussed earlier. So now that information is still there, but it's not like right at the forefront of page 1. And to get to it, what we would suggest is, and here's the case study that we talked about. This is the company with the 40 vehicles we looked at earlier. The first thing we're going to do from a loss control standpoint is look at the history, and you can access that again down in the bottom of the front page, page 1, second link to the bottom called Carrier History. And when you bring that up, on the top left of the screenshot, you'll see the blue arrow pointing to quarterly, and that filter has been reset from its default is monthly. So if you're looking at the default, you'll only be looking at the previous 6 months worth of data. You can spread that into quarterly and biannual as well. So when we did the loss control on this particular company, we spread it out to the quarterly just to see what was going on the last couple of years, and we do show the maintenance is trending down fairly nicely. Began in December, where it was 77%, but now it's down to 60% as of September anyway. However, what we're asked specifically by the underwriter to look at were the hours of service, which rightfully so, those had the golden triangle, the alert status. But what we also noticed that in addition to the upward trending in the hours of service, we were also seeing an upward trending in the on-road performance of unsafe driving. And you'll notice unsafe driving is not in the alert status yet at this point, but we do know, if we're going to follow the logic, that unsafe driving is a leading indicator as opposed to a lagging indicator. That's definitely something that we wanted to look at when we're in doing this particular loss control. But our first look at the special request of the underwriter was to take a look at the hours of service. So you can look at trending for each particular basic. You click on the basic itself, and it'll bring up first a monthly trending screen for the last 6 months. And if you'd like to open that up, and again, you'll see the 65% and the alert down here that Tommy mentioned earlier, where it says 76% of motor carriers in the same safety event group have better on-road performance than this motor carrier. It's kind of a scary statement, if you will. And besides just the alert where they stand right now, we want to look a little bit at the trending, what's been going on maybe for the past couple of years. So we're doing a semi-annual blow-up of this particular hours of service basic. And we do see definitely something going on mid-2013, and definitely an upward trend. So obviously there's something going on in the hours of service basic that we want to see what's driving that. And in addition, to looking at just the trend, we also want to focus on and drill down and look at the details. What types of violations are going on here? So the blue arrow here on the left-hand side of the screenshot, the first thing you can click on is the violation summary, which groups the violations by federal regulation. And I don't know if you can read this too well enough, but the most frequent were 6 violations, or so 6 instances of the driver's record of duty status not current. And the next most common, there were 4 instances of the driver's record of duty status, just general form and manner. He'd not filled it out all the way. So 10 of the 18, or well over half of the violations, were what we call basically lagging indicators, paperwork, if you will. Tommy, do you have any comments on this one?
Absolutely. Guys, there's one cure to this, and that's electronic logs. Even though they're not mandated, they will come down here. But what I have written a blog about and what you need to be aware about is, since those are the top 2, and those are, by the way, the top 2 violations of all violations, is the status not current and the form and manner. Electronic logs cure that. And in most cases. And so if you're in a safety event group with motor carriers with electronic logs, and your motor carrier does not have electronic logs, it's going to be almost impossible for you to get out of an alert status. You're insured to get out of alert status. So the one, my solution, Tom, you might have others in this area, would be electronic logs, because it is a paperwork. Of course, you could also train your drivers better, show them how to fill the forms out and all that, but that's no guarantee they're going to do it right.
Bottom line, it's a piece of paper, a manual log filled out by a human being who's prone to make errors from time to time. And we don't have robots, but you can put a machine in the vehicle. We looked at a 200 power unit refrigerator carrier about 3 years ago that was running in the 80s for hours of service violations, and they were just in the process of converting, and looked at them 2 nights ago on SMS, and they're barely into the 20s right now. They've totally cured that, and they have no alerts on their whole entire profile. So they do an excellent job with their safety management. Now that we've looked at the types of violations, it's interesting also to go in under the violation summary. The next area down, you'll see on the left, is the inspection history. So let's click on that and see what the inspection history brings up. You can look at just the ones with violations or the one without violations. This company had a total of 67 relevant inspections, so they're being compared to all the other carriers in the country in that peer group. And if we scroll down and look at the detail, it shows us each individual violation. If you want, you can click on the number link, and that'll bring up a copy of, not the citation, but a little bit more detail of that particular violation. One change that they made that I find very helpful on this particular version of CSA Phase 2 is at the bottom of each violation detail is the methodology right there on that page. You don't have to drill in two more links to get to it. And on the left-hand side, in the lighter orange color, is last month's its calculation of the measure. Remember, it doesn't calculate the CSA percentage, it calculates the measure, and in the darker orange on the right is this month's. The total weight divided by the time weight is basically the 200, if we're looking at this month, the 232 for total weight is the sum of the far right-hand column up above. So the time-weighted value of all those violations is 232, and then the total of the time weight is the sum of the column directly to the left of it. I mentioned earlier that the violations carry higher weight the more recent they are. For the 6 months, they carry a 3 times the severity weight for a total time-weighted value of 48, for example, on that one they have on August 8th on the top line there. After 6 months, the time weight drops to 2, and then after 12 months it drops to 1, and finally they will drop off after 24 months. But we can see just from month to month, this particular carrier's measure jumps from 1.69 up to 1.87, primarily due to that August 8th violation they got for the record of duty status not current and failing to maintain the prior 7 days logs. Those would go away with electronic logging devices. Okay, Tom, you want me to continue on that?
Yeah, it's fine. Go ahead, Tom.
Okay. Now, I do want you to pay attention to some detail. I mentioned you can click on that report number, in this case, WV369500613. And I want you to remember that number because when we click on it, it'll actually bring up the violation. But when we look at the violation, we see it wasn't just the hours of service. It'll also add any other violations that were in conjunction with that particular stop. So we see the 2 for the hours of service, but we also see the one up above, speeding 15 or more miles per hour over the limit. My question to the group is, why do you think the driver was pulled over to look at his logs? That's kind of an obvious question. So the issue then becomes, which was the leading indicator and what's the lagging indicator, and where is our focus really at? So moving on to the next slide, we'll take a look. And what everybody's asking is, how do we reduce our CSA score? Well, my suggestion would be to slow the vehicles down in this particular case. But number one, we do need time to go by in 6, 12, and 24-month increments so the time-weighted values start to reduce. Also, we need to eliminate the influx of new violations. There are some companies that offer a reward or incentive program for drivers that receive clean inspections. Mind you, those add to the time weight, but after 24 months, that time weight number will drop off, which actually makes their score could make their score go up. So just need to keep that in mind. It is not applicable to the unsafe driving and the crash indicator, since those are based on number of vehicles, not the number of inspections.
Tom, you make a very good point. The lending indication and the lagging. Folks, when you look at this, before you get cited for an hour of service violation, you have to be stopped. And there are 2 things, Tom, I appreciate your input, that will cause a vehicle to be stopped beyond just a random because they're on the hit list and they're on the inspection selection system high. That is, the vehicle's driving fast, erratic, lane change, in other words, driving out of the norm, or second, their lights are not burning, or they're out and there's not enough lights. If those 2 things are handled, you have reduced your chances of being stopped, which reduces your screening of our even hour of service by paying attention to those 2 things.
Good point. Good point. So one thing that we want to look at while we're doing the loss control is what type of action plan can we come up with to implement safety management systems to not only measure this behavior. Now, the one thing that the CSA system is great at doing is helping us manage the behavior. We've got it all encapsulated. Now we have to have a program that manages that behavior. And also the concept of focusing on frequency, because one of the concepts is that frequency ultimately breeds severity. So that's why we're looking for these, trying to identify the leading indicators. So what we've done on this slide here is we've shifted our focus from the golden triangle over to what's happening on the higher crash predictor, and that's the unsafe driving factor. And when we do our analysis on a semi-annual basis on this one, we see a similar trend that we saw back there with the hours of service. So these things are going almost hand in hand. We have to do root cause analysis and ask, why are the drivers speeding? Are they being asked to do too much? Is there not enough capacity to handle the loads? Are they being dispatched unreasonably? Are they being paid by the mile? Lots of factors can be going into that. But so we see the pattern there, and then if we do the same thing and bury down into the violation detail, we'll see this is all as a result of speeding violations. Now, when we take a look at that, you can see on this particular slide, again, for the unsafe driving, the methodology is at the bottom of the slide. Last month in the lighter orange, and this month in the darker orange, and from month to month we see this continued pattern. It went up from a measure of 2.82 to 4.00. So what the peer ranking does is tells what percentage of carriers this particular carrier's score is worse than in his peer group. Now, mind you, this carrier is reporting 40 vehicles, but the 2 times we saw him, we didn't count any more than 25 vehicles. So if he actually had an extra count of 25, his score would be higher than 2.82 and higher than 4.0 this month. Not sure what the calculations are exactly, but he's at the point where it's probably pushing that unsafe driving close to, if not into the alert status. And this particular motor carrier did have good reason to put that 40 count in there and hold on to it. He didn't want to lower his fleet count because he knew very well that his unsafe driving was going to be going up. Now, it doesn't go up immediately because they take the average power units over the preceding 3 MCS 150 filings. So just if he filed for 28 today, we calculated for him, it's really only going to bring his fleet count down to about 35 now. So it wouldn't have actually impacted him immediately. But it is important that these that the filings reflect what's on the submission that comes into.
There's also two other things about this. These speeding tickets are off the interstate highway. If they were on the interstate highway, they would only have a 1 severity. This is off the interstate highway, which has 2 factors. Obviously, the increase of crashes, the crashes increase with operations off the interstate highway. This was a study that ATRA did, so this insured has a number of operations outside the interstate highway system. The second is, even though we might come up and the government's pushing to have speed limiters, which would be set at 65 or 68 miles an hour, that wouldn't necessarily get rid of these problems you see here, because what you could have in this, the top one here, 15 miles over the speed limit, that could be going 60 in a 45. And so even though your truck is governed at 68 or 65 miles an hour, you're still going to get these speeding tickets. So governing will not automatically get rid of this problem. And second, this also shows a lot of operations and speeding operations off of the interstate highway system, which in my opinion can do more crashes, or at least more severity and more frequency, than you do on the interstate highway system.
And what you're looking at, Tommy, is the leading indicator now.
Right.
And without a doubt, we'll go about 2 more slides into this case study we're doing on this particular, and that's exactly what we found out. Was we looked at the, again, looked at the actual violation we looked at earlier, and we see the leading indicator, this particular truck with a 15-mile-an-hour driver, 15-mile-an-hour or more over the speed limit. And if we go to the next factor, which is the second highest predictor, and that's the actual crash factor itself, doing the same methodology or the same analysis and blowing it up to the past couple of years, it's not necessarily a trend, but if you draw a straight line from where they were back in 2013 to where they are now in 2014, not only are they jumping from tow-away collisions back in 2013, now they've had 2 in 2014. Both of them involved injuries, so they're more severe. So the frequency of the speeding was definitely a predictor of the severity of the crashes that we ultimately saw coming along. Here's 2 crashes that we looked. The 2 most recent, both of them involved injuries. One had 4 injuries, the most recent occurring July 24th. And if we write down those accident report numbers, or the plate numbers, and the date that occurred, and you can also look at the details on the accident report and whether the driver was cited or not by clicking on the report number itself. But looking at these, we can see that the one that happened back in March was actually a lagging indicator. The driver was written up after the accident had already occurred for his logbook for form and manner. So truthfully, the logbook was not the cause of that accident. We know from organizational behavior going on, we can see all the speeding. Here's the leading indicator. Back in April, we see that vehicle involved in a speeding incident back in April, and then 3 months later in July, he winds up having the injury with 4-injury collision. And I know people might look at this and go, well, he's only on here 1 time for speeding. Well, I know, but there's like everybody in this fleet is speeding. And again, Tommy points out these are off-country roads. The collision with the 4 injuries happened almost out in front of the company itself, which is on a rural highway, and driver failed to stop in time for stopped traffic and wound up plowing into a couple of vehicles, causing 4 collisions. So You can pull a lot of information out of the new CSA Phase 2 SMS system. Try not to take it at face value just because it has an alert symbol on there, because a lot of things are driving those numbers know what the methodology is and burrow into the look at the violations by type and also the violations individually. From this, how do we reduce the CSA score? There needs to be effective safety management in place. We've already seen frequency breeds severity, so we need to look and control and measure and manage the frequency of behaviors having. Understand the difference between a leading and a lagging indicator and what's truly leading to the collisions. And don't just measure the behavior, but do something about it. Manage it in a reward basis or a disciplinary basis. And utilization of the PSP system through the hiring to prevent drivers that have these on their records coming to work for us. And one of the early slides Tommy pointed out is that drivers with the good records, they're looking at the company's CSA because it's public information, and if it looks bad, they're deciding I'm not going to go work for that company because there's chances are I'm going to be pulled over and detained more and will probably be earning less money. Ongoing safety training, and we talked about the driver supervision through governors and speed limit, but that's not going to solve all of the instances of speeding, particularly if it's on a rural interstate with a lower speed limit than what it's governed at. But other technologies such as electronic logging devices, Qualcomm's, GPS, event monitoring, and even old-fashioned motorist observation systems have proven to be good deterrents to bad behavior. Finally, I wanted to touch on the communications awards and recognition part of it. I mentioned earlier that we've actually seen instances where rewarding the driver for a clean inspection actually wound up 24 months later raising the CSA score. So that's not the driver's fault. He should be recognized for passing a clean inspection. That's good. The concept should be that safety should actually be free. In other words, recognize events that don't happen. Like all these drivers we saw on there with the speeding violations, well, we need to recognize all those drivers that are on our roster that don't have speeding events. The drivers that were on there with accidents, we're looking at those and closely scrutinizing that, but we need to be looking at the drivers on our roster, the good ones that are not having accidents, and truly reward and recognize, because that's what we're trying to, behavior we're trying to foster within the organization. But to Tommy, I'll kind of turn it back over to you and see what kind of thoughts you have on it at this time, okay?
Tom, that's a good thing, and summarization that we have here, and we really appreciate it. This new web page has a lot of information. Some of it's kind of scary with the fines they have and how they rank and who's in a safety event group. But Tom did a very good job on something that we've been saying is don't just look at the triangle. In this case, the triangle wasn't the problem. The problem was unsafe driving. That caused the triangle. So you can't just look at the triangles. You've got to look at the data that behind those triangles to see exactly the root cause of things, as the terminology Tom has. So, Tom, I really appreciate you showing how to do that and how to show that. The other important part here is that it's important to correct. And one of the things you have to help your insured to do is make them aware of their score. And a lot of the smaller insureds don't have this score. The first thing is don't suggest a new DOT number. That's not going to work. Tom, you might want to do 2 seconds on that. But a new DOT number is going to get you on the inspection selection system. It's going to get a new entry, which means that you won't be able to write it. It'll be flagged with CSA because of the chameleon carriers with CAB and with carriers leads, and so you're not going to do that. You need to straighten it out. And one way to straighten it out is to help the insured. The FMCSA has a effort to have intervention, but their key point here is to improve. That's what the basics say. That's the I in the basic, to improve. The only way to do that is to track their scores. We have a special program for members of the Motor Carriers Education Foundation where they can list their motor carriers with this service, and for 50 cents a month get the scores emailed to the retail agent and or to the insured of what their score is. So when they start creeping up, then they can get ahead of the curve and get people like Tom and other people involved in it before they get on alert status here. And so our recommendation is to understand it, to stay on top of it, to help you insured with it, to provide more to your insured than the piece of paper. People like Tom and other people who give us service in our programs helps us to do that. Tom, we really, really appreciate you helping us this area. We thank you for the information. Again, it will be on the web page for you to look at future, and we hope you have gained something out of this hour with us. And we'll remind you again, our next website will be on December 11th at 2 p.m. and we'll look at cargo theft and recovery as a part of CargoNet and other things. And for the rest of you, particularly Tom said he's on snow. I'm sitting in Fort Myers, Florida with about 80-degree weather. For you who are with the bad weather, we hope you stay warm, and we wish you a good weekend and a good thank you. Tom, thank you very much for your time, my friend.
Thanks, Tom. We appreciate it.
We're out of here.